US tariffs are back, and this time, the world may not be ready. The global economy is being rattled, from boardrooms to kitchen tables. And the experts? They're raising the alarm. Welcome to FluxFolio Finance, the channel where markets meet meaning. Today, we're diving into the economic crisis triggered by US tariffs. We'll break down the data, the warnings, and the ripple effects that could hit your wallet. Let's get started. Since January 2025, the US has imposed sweeping tariffs, 25% on all imports from China, 10% on goods from the EU, Canada, and Mexico. What's the result? Apollo's chief economist Torsten Slok reported that the U.S. trade deficit hit a record $37 billion in January. Companies are stockpiling industrial supplies, up 34%, before tariffs hike costs further. And it's already hitting growth. The Atlanta Fed now forecasts negative 1.5% GDP growth in Q1 2025. This is more than a U.S. issue, it's a global chain reaction. The IMF just slashed U.S. growth from 2.7% to 1.8%. Global growth? Dropped to 2.8% in 2025, and 3.3% in 2026. China? Now forecast at just 4% for both years. IMF chief economist Pierre-Olivier Gourentes calls this a reset of global trade, and warns of epistemic uncertainty. In simple terms, no one knows what comes next. That uncertainty is dangerous. It stalls investment, shakes confidence, slows everything. The World Bank's January report sets global growth at 2.7%. Better than nothing, but not enough to undo the damage. Latin America is expected to grow 2.5%, but exposed to U.S. trade shocks. South Asia is forecast at 6.2% growth, driven by India, but vulnerable to higher commodity prices. Chief economist Indermit Gill says it bluntly, the next 25 years will be a tougher slog. And US tariffs are making that slog harder. A Reuters poll from April 28 says it all. 101 out of 167 economists predict a global recession. 292 out of 317 say US tariffs are hurting global business confidence. Manufacturing is slowing across Asia, especially China and Japan. Exporters are losing steam, and the effects are spreading fast. It's not just numbers. It's factory jobs. It's supply chains. It's consumer prices. And they're all under pressure. The OECD says global growth was stable in 2024, but is weakening. Inflation is lingering. Growth projections are down. And risks are up. Meanwhile, the Bank for International Settlements warns that tariffs are inflating prices, straining central banks, and raising the risk of financial shocks. Tight monetary policy plus trade conflict equals global instability. And now, there's a new twist. On April 28, Spain suffered a massive power outage. Subways stopped. Airports closed. Businesses shut down. Losses? estimated at over €500 million, in just 5 hours. Spain's cybersecurity agency suspects a state-backed cyber attack. Possibly Russia, Iran, or North Korea. It's a stark reminder, our systems are fragile. Interconnected. And increasingly targeted. Back in 2023, the IMF warned that deteriorating financial conditions, plus cyber risk, could slash global growth to just 1%. Despite sanctions, Russia supplies 25% of Europe's crude oil. As tariffs raise global energy prices, Russia is seizing the opportunity, offering more fuel to Europe. More oil, more leverage, more influence. It's not just an energy issue, it's geopolitical. The World Bank warned years ago that the economic fallout from the Ukraine war would be long-lasting. Now, it's evolving into a power play. Tariffs and blackouts don't just hit trade, they hit technology and innovation. Take Bitcoin mining, it consumes over 150 terawatt-hours globally in 2025. Mining hardware? Mostly from China. Tariffs drive up costs. Spain's blackout? It knocked out green mining farms in Catalonia. The global Bitcoin hash rate dropped 5%. Transactions slowed. Prices dipped. Confidence took a hit. Digital systems are global and fragile. That's the new reality. The IMF says more than 1/3 of the global economy may enter recession, defined by 2 consecutive quarters of negative growth. The US, China, Europe, all showing signs of slowing. US tariffs are disrupting supply chains, raising consumer prices, and undermining investor confidence. The costs are real, economic and human. So, what's the takeaway? This isn't just about tariffs. It's about a global economy under pressure, from trade policy, cyber risk, financial stress, and energy politics. The warning lights are flashing, from the IMF to the buys. Markets are jittery. Growth is slowing. And the world is watching. If you're investing, or just trying to make sense of the future, now's the time to stay alert. Like, subscribe, and tell us in the comments. How are you preparing for 2025's economic storm? We'll see you next time on FluxFolio Finance.